Analysts say investors at the equities markets are trading cautiously as they await the outcome of the ongoing Monetary Policy Committee MPC meeting, which began today. Meanwhile, limited bargain hunting activity is expected near term due to prevailing sentiments driven by movements in fixed income market yields and earnings releases. Olumide Sole, research analyst at Vetiva Capital, joins me now for more market updates. Olumide, thank you for joining us today.
Thank you for having me, Esther.
Well, all eyes are on the MPC meeting, the first since July last year, and being presided over by the new central bank governor. We have seen some cautious trading in the trading at the equities markets. I believe the market only recorded one day of positive trading last week, with the Osho index down over 3%. But let's talk about investors' expectations. What are they investors expecting in terms of pronouncements from the members and, of course, the governor himself?
So for the MPC meeting, definitely we say that the CBN has been caught in the corner in the sense that they have no option than to just hike the MPR. Because of, number one, deflation, we have experienced experimental inflation in the economy. We have seen the Naira depreciate sharply in the official window and even in the parallel market against the dollar. So all these are pointing to the fact that the CBN will likely hike interest rates to be able to fight back or strengthen the Naira and strengthen the purchasing power of consumers, the economy generally. So in regards to that, we are expected to see yields react to the expectation that we'll likely see rates increase in the MPC meeting. And as a result of that, the fixed income, the equities market also has also taken a beating. As we saw last week that the equities market generally was down. As we saw investors take profit across board, across different stocks, be able to take advantage of the yields, higher yields in the fixed income market. And as a result of that, we are seeing some stocks come down, and as a result of that, the investors are now beginning to cherry pick some bargain hunting stocks, some stocks that are valued that are below their current intrinsic value.
So where does that leave your short to perhaps medium-term forecast for the market? Because if we're having this, I'm not sure if perhaps exodus is a strong word to use, but if we're seeing more investors going to the fixed income market to take advantage of higher yields, obviously that would impact the market forecast going forward. But how are you, what is this doing for your forecast in the short to medium term?
So definitely, as we continue to expect the CBN MPC to hike interest rates and to continue their aggressive stance so as to curtail inflationary pressures and also stop the further depreciation of the Naira in the official window and even in the parallel market. We expect this to definitely encourage investors to move to rebalance their portfolio and favor fixed income instruments over equities instruments in the short term. And in the long term, looking at that gives opportunity for investors to come in and take some stocks at a bargain to be able to make more returns in the future.
As we expect yields to remain sustained at, high levels or perhaps even higher as we go into the year, is this the stock market going to be a market for those who are holding, for investors who are holding a long-term view, who are in it for the long haul, regardless of higher yields, or like you said, it's just going to be a matter of striking a good balance between the fixed income market and the equities market?
Yes, definitely. The equities market still holds potential for investors looking at long term, in the sense that if you look at the stocks for now, we have seen that some stocks that were beaten down, they're now trading at a bargain, and that gives investors advantage to be able to lock in at very, very attractive prices for their long term investment. So as a result of that, we see definitely investors coming in at that space. And also for the fixed income space, as we continue to see yields rise, we'll likely see rebalancing of portfolios, especially for major players such as PFAs, try to balance their portfolio and take advantage of higher use in the fixed income market.
Thank you so much, Olumide, for talking to us. We appreciate your time on the show today. Olumide Sole, research analyst at Vetiva Capital.